Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
One of the things we're going to do is talk about retirement planning. Marta Norton is exquisite out of Chicago. She's with Empower. I should say that Empower handles the retirement programs of Bloomberg LP. Do you know I have a retirement program?
Sure.
I can't retire.
No,
but,
just keep contributing.
I've been in the triple leveraged all cash fund with Empower forever. Joining us, Marta Norton. Marta, I read your research note, and then I look at the retirement planning of Empower, and Empower is saying, you know what, if you really believe in equities, front load your retirement contribution this year. Is that a good strategy for you? Are you so bullish that you want to tell people don't do your retirement contribution over 12 months, load the boat the first 90 days?
Of course, the argument for doing that is that then you capture with your contribution all the gains over the course of the year. And I think when we take a look at what to expect in 2026, a lot of the bull case comes down to what we expect from earnings. And that relates, of course, to the Mag 7, which are expected to deliver, something along the lines of what we saw in 2025, but then also this broadening out story for the broader market. So to the extent that we do see that come to fruition, that can be a benefit of, front loading that contribution. But what I would also add is if you're expecting a year of volatility, which is, I think, something that we could anticipate with the AI narrative and the moments of doubt that occur with that, taking advantage of the volatility, dollar cost averaging in, that can also be a viable path. So you have two good choices there.
Marta, do we have a rotation going on maybe late last year in this market, or is this still going to be an AI-driven 2026?
Yeah, this is what I am wrestling with a great deal. And I think there are two major arguments that people are pointing to when they talk about this rotation away from tech, away from AI. They point to valuations and they point to earnings. I think that second argument is a lot stronger than the first argument. When we look at valuations, we're not just looking at them relative sector to one another. We're looking at them relative to their own history. And on that count, I would actually argue that some of the Mag 7 have gotten a bit cheaper. And when we look outside that subset, if you're looking at consumer staples, if you're looking at utilities, if you're looking at some of these other areas of the market, they're actually pretty pricey.
Or more important than ever, one could argue we had some really good earnings in 2025. Do you expect earnings to continue strong enough in 26 to support this market?
I think that is a reasonable expectation. I think there's a few things that are coming to head there. On the AI front, I think we can continue to see some of that momentum from the Mag 7, from the AI names. I think when we're looking at the broader market, you have a few tailwinds to take advantage of. You have the fiscal stimulus, you have the monetary stimulus, you have what some folks are expecting to be kind of the incremental implementation of AI. This one I'm a little bit more leery of. I think it will take more time to really see a massive earnings boost from AI implementation, but maybe on the margin, that's another benefit. So I guess as much as I want to be skeptical on the earnings front, I think it's hard to find a really negative case to look at from a corporate earnings perspective.
Marta, the retirement planning game, going back to ERISA of 1974, it has been really difficult for a lot of people. How many people, within all the expertise of Empower and all the macroeconomics and the calls that you're making, how many people are behind? What percentage of America is behind on their retirement?
Well, there's a few different ways to look at this. When we take a look at access to retirement portfolios, that access has improved meaningfully. I think there's numbers that show of the private companies out there, we have about 70% offering 401ks. When we look at the actual contributions, we are seeing decent savings rates. So experts recommend somewhere between 12 and 15% saving for retirement. When we look at what numbers we saw in 2025, we see numbers that kind of rival that level. I think the big question is making sure that folks are engaged. When people get engaged with their retirement accounts, when they're paying attention, that's when you start to see the contributions tick up. When they're doing auto enroll features, when they're doing auto escalate features, that's when you start to see real improved outcomes for retirement. And there's still gains to be made there.
What is an auto escalate feature?
So the idea that every year your contribution automatically increases. So you don't have to go in and make an active decision. You press a button and that occurs automatically for you.
Nice. Should try that. I don't know if I have that activated. Go into my great app, by the way, in Empower.
Good.
Yeah, it works for me. I know what I'm doing. How about the younger folks? Are the younger folks saving and opting into 401ks and savings plans at a rate we'd like to see? How's it look for the younger folks?
So when we look at account balances, we're seeing, say, if you're in your 20s, you're seeing an account balance of somewhere around 100,000. If you're looking later in life, you're seeing account balances of somewhere around 600,000. So we are seeing engagement from the younger folks. I think this is always something that requires a lot of education with workforces. When folks are entering the workforce, maybe they're working on their Robinhood account, but they're not necessarily thinking out decades and what retirement could look like. So making sure that companies are engaging with their employees and making the case, because that's, of course, what Warren Buffett talks about, compounding being a snowball rolling down a hill. It can have such a profound impact on people's ultimate outcomes.
Well, Mr. Buffet and Mr. Bunger also talk about don't over diversify. What's a trend you see at Empower, given the macroeconomics, given a 3-year, 4-year equity post-COVID boom? Are we too diversified? Are we in too many fancy things other than doing basic block and tackle investing?
Yeah, I think at this point, what we're seeing is still, in terms of asset classes, when you look at managed accounts, for example, which is, a single solution that has a range of asset classes within it, and investors make one choice to move into that portfolio, you do see a pretty ample spread across, U.S., non-U.S., fixed income. It's not overly exotic, and you have seen a real benefit. And I think this was one of the things that came into question last year. Does something like the 60-40 deliver? And you did see a real benefit from that style of investing. So at least kind of spreading beyond the S&P 500. I think that is something that we've seen some value to. Now, whether every single niche asset class adds value to the same degree, that's another question.
Marta, thank you so much. Marta Norton with Empower. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
This is a special moment for Bloomberg Surveillance. We'd love to see our guests over the years have a conviction, have a belief. Sometimes they're wrong. Has Dan Ives ever been wrong?
Oh, I think
there was a while back there. But he's been right enough where today he will do something very cool. I've enjoyed this wonderful privilege to sit with Ken Pruitt and watch Charlie Pellet ring the bell of the New York Stock Exchange. Mr. Ives, I believe, will open trading of the New York Stock Exchange today in celebration of the success of the Ives ETF. It's brought in a few doubloons over the recent weeks. Dan Ives joins us from Wedbush in celebration of 9:30 this morning. Dan, what does it feel like to join Snoop Dogg and Kiss with the, I don't know, to these fancy people ringing the bell? What are you going to dress appropriately?
I dress appropriately. It's part of history, right? What the New York Stock Exchange represents in terms of those walls, and obviously the success that we've had with Ives. It's not just me, it's the team, but it's the broad belief that investors have had in us in this AI revolution. So it's so exciting to be a part of history this morning.
Is your ETF actively managed? Is it passive? Has there been a strategic Ives call that's brought in a few dollars?
Yeah, look, I mean, this is all based on the Ives AI 30, which is these are our AI 30, our 30 winners in the AI revolution, all based on our research 4 times a year. We basically switch in and out who I believe is more relevant, less relevant. And, the last 6 months, getting to $1 billion, it's been, I think, a validation as investors are trying to find how do you play the AI revolution. And I'm happy that they've got the confidence in us.
And just for this fund here, the top fund holdings are names that Dan's been talking about for a long time: NVIDIA, Micron Technologies, Taiwan Semiconductor, Amazon, Alphabet, Microsoft. So the names that Dan's been recommending for a long time. Dan, speaking of AI, we know you just returned from Las Vegas, the Consumer Electronics Show. I'm hearing a lot about physical AI. I heard that from Mr. Wang, Jensen Huang at NVIDIA. What is physical AI and what are the opportunities there?
Yeah, look, Paul, physical AI, it's really about autonomous robotics. I mean, this is now what I view as the consumer AI revolution starts in terms of physical AI. And I think what you saw with NVIDIA, they're laying out end-to-end platform on autonomous. We've talked about it's why we're so bullish on Tesla, given robotaxis and the autonomous sort of vision there. But this is the next stage of AI, but it's all fueled by the godfather of AI, Jensen, NVIDIA.
I looked, Dan, and Wells Fargo reducing their overweight. They stay overweight on Microsoft from whatever it was down to 665. Down the income statement into the earnings season, Dan Ives, with you with a 625 outperform on Microsoft. Where in the financial statements is the important point for Microsoft earnings?
I mean, I think it's about Azure and cloud growth. To put it into context, I mean, you're talking about the highest margin business that I believe the street's underestimating probably by 10 to 15% this year. And You're talking about, I think the street's ultimately underestimating about $25 billion of incremental growth from a cash flow perspective. We're talking about $15 billion that I don't think is factored into street models from Microsoft.
Right. Well, they're modeling 15% revenue growth. So are you saying down the income statement is the underestimation of Microsoft?
Yeah, I think it's underestimated from a growth perspective on cloud and underestimated in terms of what we see on cash flow. And the reality is the enterprise AI revolution, it all starts in Redmond and Nadella. And the street is underestimating what this means for Microsoft.
Dan, one of the things I heard from CES and NVIDIA, they launched this Alpha Mayo platform. Tell us what this is, because this gets a little scary for some people, I think.
Yeah, I mean, like you could say it's reasoning or really AI meets autonomous. It's an end-to-end platform that NVIDIA is basically laying out as their answer for autonomous. It's really something that ultimately better than the human driver.
Right.
And I view it as just like what Tesla's doing on robotaxis, just like what we're seeing on autonomous. NVIDIA is going to be a supplier from the chip perspective, but also they're going to play an end-to-end platform play as well.
Dan Ives with us this morning with Wedbush, a celebration in just under 1 hour. He will stand at the New York Stock Exchange with his wonderful ETF. It's really done well in the vectors from, as Gartman would say, from the lower left to the upper right as well. Dan, I want to switch to Apple. I was just in Paris, and I'd never been to the Tuileries, to the Musée Orangerie, it's called, which is those lovely, simple, quiet Monet paintings of the water lilies, sterile, quiet. And I witnessed there, Dan Ives, and I thought of you, packed tourists, many, many from the Pacific Rim, holding Apple iPhones in their hands, taking photos, taking selfies, doing YouTube-y stuff in front of the quiet of Claude Monet of 1890, his gift to the nation at World War I. Explain, Dan Ives, what I witnessed. Where are we in 5 years with the use of the iPhone?
Look, and I think it's all about the AI coming to the Apple ecosystem. We've talked about this is going to be the year of AI for Apple. I mean, you're talking about what? 1.5 billion iPhones in the world. I mean, 2.4 billion iOS devices. It's about when you when you look at this next stage for Apple, it's going to be the most important stage as they go into this AI revolution and they monetize that install base. That's going to be front and center. And it's why it continues to be one of our top picks. And in my opinion, underestimated in terms of what the error that they're hitting when it comes to AI.
Dan, I know we kind of knew this CES was going to be all AI centric here. As you talk to investors, are you sensing any AI fatigue that maybe it's played out, or boy, it's hard to handle these valuations, or boy, the numbers are getting so big? What's the conversations you're having with clients about just the AI?
Paul, I think when the time we spent there with NVIDIA and Jensen and on the floor, you cannot come away thinking that there's an AI bubble. I mean, we're still in the early days of playing out because you see what's happening on embedded devices, on the chip releases, obviously some releases to AMD and others. And I think it's not fatigue. I think investors are starting to realize that this next stage of the AI revolution is now taking hold.
Dan, help me here with this. Paul mentioned CES. Where do the smaller AI companies fit in? Are we going to, like Perplexity, are we going to see M&A this year for all of these names like Claude and the rest that I don't understand? Are we going to see an AI roll-up?
I think you're going to see a lot of acquisitions, strategic financial acquisitions in terms of tech. We talk about robotics. That's one of our favorite areas. Names like Serve Robotics is in a good example. Look, and the reality is that it's an arms race that's playing out. It's going to be a lot of acquisitions, a lot of consolidation. And I think that's why it's just going to be year 3 of an 8 to 10 year build out of the AI revolution.
Right. When did you get into tech stocks? Like, were you sitting in the student union? I've sat in the student union at Penn State. Were you out at State College one day and the light shone down Dan Ives and theirs was epiphany, wear bright clothes and follow tech?
I think, look, I mean, obviously it started in my Penn State days. I have a lot of Penn Staters here at the bell ringing. But I think, Tom, to me, it was really in the late 90s, starting to cover internet. It was the recognition that it was going to be the start of what's really going to be a 40, 50-year tech build-out. And I think what we're seeing today is just the next stage of that. It started in State College, and obviously, I'm super happy that investors have supported me along the journey.
Dan, so what's the key issue, pushback, if any, from your clients these days? Is it valuation? Is it just I've made my money, I'm taking it off the table here? What's the pushback?
Yeah, I think valuation, circular financing. Is there a too big to fail moment? OpenAI and NVIDIA. I think those are some U.S.-China trade negotiations, tariffs. But look, to me, it's like we'll have these white knuckle moments. But like I said, I think tech stocks are up 20% this year. But it's as we get into earnings season in January, and you get more into CapEx,
right.
You get more. I think that's going to be the key of this next stage.
Are the tech I'm going to ask a Paul Sweeney question. We got to go, Dan. Are the tech bro going to grow up and finally develop dividends and dividend growth?
Eventually, I don't think now, because you want to focus on investments, right? And I think that, to me, this is an arms race. It's 10:30 p.m. in the AI party. Goes to 4 a.m. Don't worry if there's some glass dropped in the dance floor. Okay. Dan, congratulations on the initiative of your ETF. What was the number he brought in? It was like...
Well, I think there's like $1 billion in there.
$1 billion in that?
Good for him. That's a nice number.
Stay with us. More from Bloomberg Surveillance coming up after this.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Wendy Schiller joins us now as we go look at land grabs there. If you do the AI thing like your students and I do, Professor Schiller, up at Brown University, it's something like Jefferson, a strict constructionist, worried the Constitution didn't grant power to buy territory. Let's start with the basics. Is President Trump trying to buy territory in Greenland or Venezuela?
Well, Tom and Paul and Lisa, Stephen Miller, is one of his chief domestic advisors, said, yeah, they want to buy Greenland. They want to control Greenland somehow. And if they want to do that, at least the most famous precedent would indicate they need Congress's permission in a vote to authorize using U.S. dollars to do that.
Is that a Louisiana purchase?
It is a Louisiana purchase. And we're going to buy a major territory. Now, a lot of people don't know the scope of Louisiana Purchase, how much land that was and why it was so important, to go west and sort of opening that entire gateway and really solidifying, I think, U.S. expansion. So it's really going to have to be a justification when, again, people are worried about things at home. The president seems to be focusing, with some exceptions, on matters abroad.
Wendy, should we be surprised that Congress is giving the president a fair amount of leeway here on these international efforts in Venezuela, maybe Greenland, maybe some other areas? Should Congress be taking a larger role here?
Well, on Venezuela, the president of the United States can take military action without talking to Congress, without telling Congress, for some limited period of time. And, the technicalities of the War Powers Act is really boots on the ground, troops that are going to be there. You have about 45 days, then you have to ask permission again for 45 days. Then you need an authorization of military force like we had in Iraq. That's the rule. That's the law. The president seems to find ways of exercising presidential power without following the law. But right now he is within the bounds of presidential power in Venezuela. Greenland's totally different. And you're seeing Republican senators really get out there very quickly and say, we're not buying Greenland. What are we doing? We don't need Greenland. This doesn't seem to be what we should be focusing on. So you've got some prominent Republican voices in the Senate saying, no, we're not going to approve this. So I don't know how he moves money from the Treasury somehow to buy Greenland without that support, but it's a bigger matter. Republicans don't love to get involved in these conflicts without any end game, except, of course, Iraq under George W. Bush. So going into an election year, how do you tell your constituents this is what we should be doing? And Trump hasn't given them a really clear explanation they can use with their constituents.
So politically, how does this play in an election year for the Republicans and the Democrats here with President Trump, like many presidents do here at this stage of their in a second term, focusing on international efforts? How does this play domestically, do you think, politically?
Well, Republicans have argued for limited government. They supported DOGE. They supported cutting government. Spending can go awry, as we saw in Minnesota. Things, if they're not watched, we can lose a lot of money to inefficiency and corruption. That's a winning message with most voters. But how does that improve voters' lives right now? And the Democrats have the task, without being in power, of saying, if you give us power, we will make your life better on these dimensions. And Republicans now are sort of saddled with explaining how they can control the entire federal government and not make things better for people. Right. And going into Greenland and Venezuela doesn't really show voters there. So both parties face some challenges. They're kind of inverse of each other.
Wendy Schiller with us with Brown University. Can't say enough about her academic effort. A new treatise out on inequality across states in America at Cambridge. We're celebrating that as well. Paul, in the old days, you and I studied the Louisiana Purchase, before a Duke basketball game. Sure. We read like 6 pages in the Cliff Notes.
Yep.
David Rubenstein now at the archives, you go in, you can see the actual photo images of the 7-page document. You can click and get a transcription. So here's where we're heading, Professor Schiller. I'm making this up, folks. Treaty between the United States of America and the Kingdom of Denmark. The President of the United States of America and the First Consul of the Kingdom of Denmark, and the name of the Danish people, designed to remove all sorts of misunderstanding relative to the pursuit of happiness and all the rest of it. Wendy, are we heading towards, almost a Versailles Hall of Mirrors document signing with Denmark?
Well, again, we know this from history. Presidents need the Senate to approve treaties. That's the rule. That's in the Constitution. You can't really get around that. So he could sign a document and they could have some ceremony, but it wouldn't have any standing unless the Senate approves the treaty. And we know that Senates have rejected treaties in the past. Ask Jimmy Carter on SALT II. So you can get rejected. And certainly, I think this is the thing that the Republicans want to avoid. The Republicans in Congress now are running from behind to keep control of the House and maybe even the Senate. And they need something to help them get back into the game. Having to attend a signing ceremony on purchasing Greenland is not going to get the Republicans back in the game to hold power in 2026.
I mean, Paul, this is the Detroit Lions blue button. Excuse me. Paul, this is a huge deal. The Senate, we don't know, as Professor Schiller just said. It's up for grabs.
It is. So, again, the news is coming fast and furious, Wendy. We had this ICE Minneapolis shooting kind of raising questions just about ICE in general and how ICE interacts with citizens and non-citizens. Is this a political liability for the president, or does this, in fact, play up to kind of what his base is looking for?
Well, I mean, his core base supports him really no matter what he does. And remember, he's not actually running for anything in November. But we've seen with George Floyd in Minneapolis in particular also how this event could catalyze and organize what have been resistance movements across the country to ICE and the placement of the National Guard in major cities. And that could really bring it all together under the umbrella of overreach and overstepping power. We know that the vast majority of Americans, or the vast majority, 63% or so, disapprove of ICE tactics. So this is not going to help that number with Republicans, and independents are in that mix, as are Republican voters. So you have to ask yourself, if you're Congress, do you want to defend these measures consistently? The real power Trump has now still over the Republicans in Congress is the primaries. He can swoop in and shift a primary. At least we saw that in the fall. If he can still do that, they have to stay loyal to him because they don't want him to come into their backyard and get them a primary challenge that they can't win.
Wendy, thank you so much. Professor Schiller of Brown University. Stay with us. More from Bloomberg Surveillance coming up after this.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
With our newspapers, Lisa Mateo.
Okay, so we've all heard about AI taking over a lot of the mundane tasks at work, right? The stuff you don't want to do. The thought is that it's going to free you to concentrate on like the important stuff, right? To focus on that. But some executives are telling the Wall Street Journal there is a downside to that. And they say that quote, busy work is what gives your brain a break. So it prevents burnout because you're taking a break, and that break from doing all those, from doing those tasks, it makes you think more, and it gives you these creative sparks. So they're saying you need the busy work.
What is this, a conversation in the kitchen last night?
Is that what it really is? It's come up. So they're saying you need that busy work to spark some creative, energy.
Like empty the dishwasher.
Yes, that's mundane work, and she can get some great creative energy from doing the from emptying the dishwasher. But that's where it's a different side to it, because we've always heard how the benefits of getting rid of the mundane tasks, but they're saying we need them.
See, I'm kind of a task-oriented person as opposed to the whiteboard.
Do you make a list on the weekend?
Yeah. The whiteboard, all that? No, thank you. Yeah. No, I just
you don't make a list on the weekend.
No. But a
to-do list.
No. My father was the absolute worst, and because of him, there's never been a list in my house.
Buy them low, sell them high. I can follow that.
Next.
There you go. Okay, we know food costs are on the rise, right? We always talk about that. But Bloomberg has this interesting article on the terminal. You got to check it out. It's saying that some chefs, they're turning to trash to create new menus. Now, stay with me, okay? I'm not talking about they're going in the garbage, okay? They're not going in the garbage, but they're doing these zero waste menus. So they're using ingredients that they would normally throw out, like things like mushroom powder made from stems, trimmings, but you wouldn't know by the price because they're creating these tasting menus that cost $160.
Nice.
So they're making a profit on things that they would have thrown out. So it's a different look into how companies are dealing with the increase of food prices. But there's a lot of waste. Like there's a report that shows more than 1 billion tons of food gets tossed in the world each year. Restaurants, about 30% of that total. A lot of it is, from people when you're done eating, you just kind of throw your food out. But a lot of it is from stuff that they could reuse that they choose not to.
Well, I think part of the problem is just in the U.S., I notice it, is just the portions are just out of control big.
Yes.
And they're embarrassing.
It's ridiculous. Yes. Now we split everything. We split what we ordered last night.
Major shout out in New York City. They led the way. City Harvest has been brilliant at this.
Oh, yes.
Is a great charity. What else do you have? Give me one more.
Okay, I'll give you one more because we were talking about, someone mentioned earlier the dry January, right? People drinking a lot less.
We talk about is everybody
the death
looking
of
at me
happy hour. Okay, so this is the sober party girl revolution.
Oh,
okay, this is in the New York Times. They had like over 100 people who went to this New Year's place. Called The Maze. Those are like those private clubs that people pay memberships for.
Yeah.
But the difference with this one is that it does not serve alcohol. So it costs their annual dues are about $3,300 a year. You have a one-time fee of about $1,500. All that you get, the fancy chairs and you get the nice spaces and the fancy restaurant dishes, but you get no alcohol. And they're saying this is the trend. People are drinking less alcohol and they want to go to these places where they don't have to worry about other drunk people, being an issue.
What percentage of them are all gummied up when they go into the maze?
That was not mentioned in the article.
Yeah.
But they're just saying that they want members to remain sober on site. They don't want anyone drinking on their club. And people are paying to have this membership, over $3,000 a year.
The newspapers, Lisa Mateo there with another lecture for Tom Keene. Greatly appreciate that this morning.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.